Elara Capital says that the failure of a bounce indicates a shift to a bear market verdict for the next 18 to 24 months. We don't like to hear that word, right? A bear. Now, to discuss this and more is in our charting trend segment. We have Biju Samuel, Executive Vice President, Quantitative and Alternative Strategy at Elara. Thank you very much, Biju, for joining us. Good morning, Prashant this side. So, put out the thesis, a bear market for 18 to 24 months, Biju? Is that the base case, according to you?
Yes, actually, we've shifted to this bear verdict since early January. And we were holding a structurally positive view on India since the COVID bottom. And the evidences started piling up, and most of them became really formidable by end of December, early Jan, to suggest that the market trend is really shifted to a long-term bear market.
Hi, Biju. Good morning and good to see you, Ben. So that 18 to 24 months, some months are already over, or are we at the start of that?
5 months. Yeah, 5 months. There is no hard and fast rule.
But
right now, 5 months are over. What it shows is we've seen a durable peak. We are going to see a durable downtrend with multiple legs. So it can be, I would say, based on some of the patterns, at least another 3 quarters of negative movement. That's very much there.
What are the even lower from here? So, price action wise, say the Nifty is down, I think, what, 16%, right, from the highs?
Yes.
The small cap index on the other extreme is down 25%. This is as of Friday's close. So, how much more here?
See, right now, the base case scenario is market testing the long-term support around slightly below 20,000. That is around 19,500. That's where some structural supports come into place. So my base case is a market testing that level, but obviously it's not going to go straight away there. My sense is we generally, the beginning of a bear market, the first leg always leads to a massive selling climax. So I think that generally happens when a prominent low is taken out, which I think could be the election low, which is 21,300. A move below that creates a bit of climactic sell-off, which leads to the end of the first swing in the bear market. Already the small caps index, mid cap index, I think they're below the election lows index levels. So maybe the Nifty could be following suit soon. Right now, 21,800, there could be a short-lived support, but 23,000 to 23,300 has become a big supply zone now, where a lot of people are waiting to exit.
Oh, Biju, so if I could just, recap this to map the numbers straight in our head, what you're saying that eventually you see supports emerging only around 19,500. And that intraday low on the election result day, I mean, that's nothing but a sentimental number. So you're not expecting 21,000 to hold at all, is it?
There could be temporary holding there, but as I mentioned, once a bear market trend is established, we are unlikely to see a sizable recovery till a full-scale selling climax is in place, where most of the hiding grounds, everything collapses in one wave for maybe 2-3 days into that fall. So that's what I expect to happen when maybe that 21,300 is broken. So we may go to slightly below 21 in that swing. That could be the point for a bear market rally.
Okay, all right. Biju, actually, the headline index going to 20,000 or thereabouts, that's close to 10% away from here. The bigger fear is what happens to the broader markets. They are already down more than 20%. What happens to those indices, small and mid caps?
They would definitely be extending the decline. We cannot have a situation where the Nifty is going there and they are resilient, which is unlikely. Maybe we have seen the mid and small phase, and now the top stocks also joining in this phase. It could be something like that.
Okay, so Biju, so so globally also a top is in. You believe in the US, etc.?
None of our frameworks are suggesting a bearish trend in the global markets, especially the DM bull market is still intact. There is a high probability that the US dip that we've seen last week, it's turning around. The Friday's price action seems to
Friday,
be
yeah.
more like a turnaround. Yes.
Got it. Biju, can it happen that the US stays, and there have been, you would agree, right? The last 3 years, 4 years, there's been very strong correlation between the Nifty and the Nasdaq.
Yes.
If you look at indices around the world, the Nasdaq keeps making newer highs, and we keep plunging to newer lows. It can happen, like it's already happened for 4-5 months, but 18-24 months.
Yeah, so I think this is a specific macro break on India. In fact, we've been sharing this India's alpha break, those charts. Like if you look at Nifty relative to the emerging markets index, we broke an alpha uptrend after 4 years. We've been outperforming since early 2021. That structure is broken. So there is specifically an India macro negative here. And the US support here, I think the US market strength could help the IT in India.
Oh, okay. So just elaborate.
What is the specific macro break, Biju?
This is actually put it simply, if you take a relative chart of the Nifty, both the local Nifty as well as the USD Nifty, relative to MSCI EM index, I generally watch that relative with a 1-year average. It has been staying above that 1-year average since early 2021. And any setback in India's alpha was contained at the 1-year average. It was like a mean reversion. And since the last 1.5 months, we've decisively broken that 1-year average of India's relative. It actually puts us to a significant room on the downside in terms of further underperformance. We might underperform the EMs still significantly. I mean, the global market still significantly from here.
Okay, so the thing is now, Biju, going by everything that you're saying, we probably need to buckle up for another maybe 2,000 points down from here, if not more. So the question is, what could be relative safe havens? What could fall the most in this last leg? You mentioned IT. Now, last week, even IT didn't hold up at all because of maybe the Nasdaq was underperforming. But what should the strategy be from here on? Where should you take profits if you have any left? I mean, not many people would have profits. 1-year gains have been wiped out. But what could fall the most in this last leg? And what could be a relative safe haven?
Yeah, so IT is one place where I see, especially since middle of last year, the IT leadership has been sort of coming back. There is a potential long-term bullish structure for IT since 2020. I think the latest setback that we were seeing in IT the last few days, last 10 days, most likely it has reached the worst case within that bullish framework. So IT should be very attractive here. I think the US strength further should be helping it, especially when the US broader markets in the US, broader pockets in the US does well. Indian IT, Nifty IT has done relatively well. So IT is definitely one. And the thing is, everything has the challenge also. The pattern is such that even IT should not stay weak till the end. I mean, where it is right now, it should not close there by the end of this month, where the quarter is ending. If the IT is closing weak or at these levels, or if the IT is not restoring from here, then there will be negative patterns there also. But I will not right now read into that. But I would look for restoration in IT. Pharma is also, I think, attractive. The main trend is strong for pharma. These are the only two pockets, especially IT, where I find even absolute trends being positive, maybe for the next 16, 18 months. Otherwise, maybe on the downside, initially, the private banks are becoming a hiding ground, especially the last 10 days. So maybe that hiding ground may break. That's possible. I mean, its outperformance has reached a barrier. There is a chance of that weakening, maybe the last few days of
Got
the
it.
selling climax could be characterized by
Got
a
it.
break in heavyweight banks.
Biju, 10 seconds, 10-second response to this. What would negate this view? Bear market view.
Yeah, ours is actually based a lot on a lot of multiple factors rather than a particular level. For example, first sign of strength for us would be when we see accumulation signs, the market rewarding those who are accumulating. Since the last 4 months, what we are seeing is any days when accumulation happened, the next day the market is falling. So at the same time, when there is distribution, the market is rewarding them. So this first sign that we look for is when there is accumulation days, the market gives positive returns immediately. Market showing a response to oversold. Now the market is stuck at oversold without any response. For example, on Friday, 35% of the stocks in Nifty 500 are below 30 in RSI. And after that, we are
Sure.
seeing a muted response. Yeah.
Yeah. Biju, thank you very much. Those are sobering thoughts and sobering numbers, really, and something that we need to really take stock of. Thank you for joining in. As we